We are going to wrap up today, though, with a look at healthcare, a look at the three UK-listed global healthcare trusts, because there have been some developments there recently, Val, set against a backdrop of rather indifferent performance. It's been a tough time for biotech in particular since interest rates rose. Why don't we start by talking about the three trusts, and then we'll get into what a couple of them are doing, starting with an unusual change of strategy.
Yeah, so these are the trusts that invest in healthcare as a sector more broadly. So they've got quite a lot of exposure to like big healthcare companies, think Eli Lilly, AstraZeneca, that sort of thing. And then they've got some smaller companies in various sectors, including biotech. So they're kind of like positioning themselves as a broad one-stop exposure for healthcare. And so, as you said, there's three of them. The biggest one is Worldwide Healthcare, which has got about 1.4 billion in market cap. So it's very growth focused. It's got some unquoted exposure. We're going to talk about this one a little less because it's so big that it's kind of like doing its own thing in a sense. And then you've got the Polar Capital Global Healthcare Trust, which is about 470 million in market cap at the minute, and has very much been the outperformer in the past few years, has done really, really well. And its kind of defining feature has been that it's got a fixed life. So, every few years, basically, it takes a look at itself and goes like, okay, are we giving all our money back to shareholders, or are we doing something new with this strategy? And then the final one is Bellevue. So Bellevue Healthcare has had a bit of trouble recently. Is now only left with about 150 million market cap. It's growth focused. It's got a lot of US exposure, even in an area that is very sort of skewed towards the US, but they've got like about 85% of the portfolio in US stocks. And it has really not performed very well in the past few years. And so he has become smaller and smaller. The reason being that they, until now, they've had a discount control mechanism, which meant that every year investors could just decide to take their money out at the net asset value minus costs. So basically every year, the discount wouldn't widen because of that. But anybody who was not happy with the strategy or even wanted to do a bit of a shorter term play on the discount could just get their money back every year. And so that's partly why the trust has become so small, basically.
Before we talk about what it's proposing to do, I should say, as you point out, that Polar Capital Healthcare has done pretty well, yes. And the sector backdrop is very much, I think the sector of the AIC is biotech and healthcare, so a lot more riskier trusts in there, which have done quite badly. And I think over the last 5 years, that sector has lost about 15%, but Polar has made about 70%. So very much the exception, as you say, and I probably shouldn't lump it in performance-wise with the others for that reason. But let's talk about the changes, though. We'll come back to Polar in a minute. Bellevue, effectively, it wants to adopt a long-short strategy, which is very unusual for a sector-specific trust.
Yeah. So clearly the board has decided that they needed to do something. And they want to appoint a new manager, which would be Columbia Threadneedle, and replace their current strategy, which is long only, with a long short one, which generally, not a lot of trusts do that at all. The reason why they think this will work well is that healthcare, basically, you have a lot of companies that can do very well, and then you have a lot of companies that can do really poorly, which makes sense if you think about, there's a lot of drugs out there that are being tested, and then the trials fail, and then, the biotech company just loses a lot. And then you've got, regulatory pressures, everything that's happening in the US. So there's quite a lot going on. So these Columbia Threadneedle managers think that basically that gives them quite a lot of opportunity to generate outperformance, not just by going long, but also by shorting certain stocks that they think are overvalued or are not going to do well. And I mean, the strategy has worked well so far, but it has only launched in July 2023. So it's quite a short period to sort of compare it And as you said, over this period, biotech has had a very tough time. So it's kind of like an easier life for people who are shorting stocks in this area. So it kind of remains to be seen a bit. But on the plus side, it is clearly like a different proposal to what the other trusts are doing. So yeah, if the trust was trying to get creative to survive, that is certainly one option.
Yeah, that would certainly make it stand out. Albeit, yes, I mean it's risky enough buying biotechs and trying to pick the right ones, shorting them, given the almost unlimited downside would seem to be riskier still, wouldn't it? I mean, there is an argument, a case here maybe that isn't there that it could have attempted to merge with another trust, albeit. The question is kind of out of its hands, I suppose. It would be more a case of hoping that someone like Polar might come along and take it over, perhaps.
Yeah, there is that, and then the argument has been that there's not a lot of Bellevue shareholders left, clearly, and it seems to be the part of the problem is that they already have investment in the other two trusts, and they want something different from this one, or at least that is the argument the board is going with. We will very much have to see whether it works, because the annual tender that I was talking about earlier will be gone if this new proposal is approved. But there would be, the board has said, quarterly liquidity opportunities for up to 15% of the capital. So that is still quite a lot of opportunities for shareholders to get out if this new strategy potentially doesn't do well or doesn't work. And clearly the trust does not have a lot of assets left. So, if it outperforms for a while, then people will just take their money out, and then the question will kind of present itself again.
On the subject of tenders, Polar also has one in the works because it's approaching the end of its fixed term life, as we discussed earlier. Slightly different in nature, but can we say a bit about what it is proposing?
Yeah, so Polar is in many ways in a much better position because, as we said, it's performed really, really well. It's a bit bigger, so it's got some more margin, but it's coming to the end of its fixed term life. And obviously, one of the reasons why people invested in it in the first place is that they knew they were going to have the opportunity to take the money out at some point. So the proposal is 100% tender, which would mean, everybody who wants to take the money out can take their money out. However, the trust has also said that it depends how much money is taken out effectively. So they've kind of put this sort of bar at 270 million in assets, which they say are necessary for the company to remain viable after the tender. So what they've decided to do is that they will do the tender. They will see, how much demand there is for cashing in. And then if it's over 40% of the shares, then they will rethink their option. And, basically the tender is becoming conditional on this sort of threshold, because basically they think that if it goes below, one of the problems will be that the costs of the company will then become a disproportionate burden on the shareholders that decide to stay. So effectively, it is still possible that the trust will just decide to liquidate everything instead rather than continuing.
Yeah, I mean, it would be a shame. The trust has performed well, albeit with this fixed term life, as we said. But when you're reaching that point now, it would be a shame if it were to go away, wouldn't it? So maybe I think that the 100% tender would happen every 5 years if this were approved. So that might be a way to perpetuate it, but investors ultimately will have to make that decision themselves.